We're analyzing LTC Properties, stock ticker LTC, to see if its market price is a fair value. We're using the Select 6 analysis to look at the most telling financial metrics before estimating an intrinsic value for LTC. Then we're giving the final rating to the business. There will be a key bonus metric along the way that just might be the tipping point when analyzing LTC for your portfolio. Before we get into these valuable metrics, let's understand LTC stock performance. LTC stock currently trades at $34.02 per share. In the last year, their stock price is down 8.5%. Even though this is down, this is outperforming the S&P 500 during this time. In the last 5 years, LTC is down 9% overall. Over the last 10 years, their stock price is down 26.5%. However, going back prior to the global financial crisis, in the last 18 years, LTC stock price has compounded at a rate of just over 3% annually. The company is a real estate investment trust or a REIT, so they have to pay out dividends. Currently, LTC has a very large 6.7% dividend yield. Their average dividend yield throughout this time would be in addition to these compounded annual returns. LTC is only trading $2 above their 52-week low. The company is down $13 from their 52-week high. 2% of their shares outstanding are sold short, and LTE has a $1.4 billion market cap. Learning more, LTC Properties Inc. is a healthcare facility real estate investment trust. The company operates one segment that works to invest in healthcare facilities through mortgage loans, property lease transactions, and other investments. LTC generates all of its revenue in the United States. LTC is an active capital provider in the senior housing and healthcare real estate industry. The company has been actively engaged with its operating partners to create a growing pipeline of projects. LTC holds 181 investments in 27 states with 29 different operating partners. Their portfolio has an approximate 50-50 split between senior housing and skilled nursing properties. Starting off with metric number 1, we want their average return on equity to be above 12%. This is because a typical REIT earns about a 6% return on equity. By looking for a benchmark that's double this, we can potentially build in some margin of safety based off the overall quality of the business being about twice as good as average. LTC's return on equity has fluctuated in the last 5 years. They had a high of nearly 19.5% in fiscal 2018 and a low of just over 7% in 2021. Their returns on equity have been above average in all 5 of these years. Putting this all together, LTC earns about a 12.3% average return on equity in a given year. This is just slightly above our benchmark, meaning this is a check to start things off on metric number 1. Metric number 2, we're taking a high-level look at their growth. We want to see revenue and cash from operations growth in the last 5 years. This metric needs both of these to be up, otherwise it'll be an X. In the last 5 years, LTC has increased their revenues by 3%, so very slight revenue growth. At the same time, the company's cash from operations have declined slightly by about 9%. Because this is split here, this is an X on metric number 2. Metric number 3, we're looking for shares outstanding to be decreasing in the last 5 years. Many REITs tend to be externally funded, meaning that they fuel their growth by taking on additional debt or by issuing shares. LTC has seemed like it has not taken on the same level of external funding as many other REITs, which could be either a good or a bad thing. It honestly depends here. The company has very marginally diluted existing shareholders in the last 5 years. Their shares outstanding are up less than half a percentage point in this 5-year time frame. While that dilution is very small and it does compare favorably to many other REITs, this is still an X on metric number 3. Putting our previous 2 metrics together here for metric number 4, we're looking for cash flow per share growth over the last 5 years. Because the company's cash from operations are down in this time, and with their very marginal shareholder dilution, this means that their cash flows per share are down. This is an X on metric number 4. So far through our first 4 metrics, we have 1 check for LTC Properties. Metric number 5, here we're evaluating how the business is using debt. We don't want to be investing in overly levered businesses. Overly levered businesses are at the greatest risk of poor outcomes during economic downturns. We want LTC's net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of cash from operations that the business has produced in their last 5 years. LTC has added on to their net debt position over this time. Currently, the business has $756 million in net debt, and in the last 5 years, the company has produced just about $500 $551 million of cash from operations. This is below the company's net debt position by about $200 million. We have seen other REITs that are falling short by quite a bit more on this metric than LTC is here. This is potentially still more debt than what we ideally are looking for here, meaning this is an X on metric number 5. As a real estate business, LTC may be reasonably able to lever their assets at higher rates than some other types of assets in other businesses, so this may or may not actually be a potential concern. You'd want to dig into the company's filings where they break out their debt profile in more detail in order to learn more. The big metric of them all, metric number 6, we want their average cash from operations to their total enterprise value to give us a yield that's above 5%. If this is the case, this will give us a slight risk premium to the yield of the 10-year treasury, and it may offer a potential starting point for a fair value of LTC. LTC has just under a $2.2 billion total enterprise value. This takes into account both their market cap and their net debt position, so it gives us a perspective of the economic reality of the business that's more similar as if LTC were a private business. We learned in our last metric that the company has produced $551 million in cash from operations in the last 5 years, meaning that they produce about $110 million in average cash from operations in a given year. When we divide their $110 million of their average cash from operations by their nearly $2.2 billion total enterprise value, that gives us just about a 5% average cash from operations to enterprise value yield for the business. This is almost exactly at that benchmark we were looking for, and this is a check here on metric number 6 for LTC. Worth noting is on a current basis, the company has produced $105 million in cash from operations in their most recent fiscal year. When we divide that by their nearly $2.2 billion total enterprise value, that gives us about a 4.7% current cash from operations to enterprise value yield for LTC. So while that is slightly down from that risk premium, that would be above the yield of the 10-year treasury. Even though this is a check on metric number 6, these two are still split here, so you'd want to be mindful of that fact. You'll also want to stick around as we perform a discounted cash flow analysis of the business to come to a more concrete estimate for its intrinsic value before we give a final rating to LTC. But first, we can't forget about our bonus metric. As our bonus, we're looking at LTC's dividend profile. LTC pays out that large 6.7% dividend yield currently. That's more than 3 times better than the dividend yield you'd receive from an S&P 500 ETF. However, people make mistakes all the time by blindly chasing dividends. It's important to stop and look at the underlying fundamentals of a business to figure out if that dividend is going to be sustainable or not. We want LTC to have supported their dividends using their cash flows in all 5 of these years, and that's been the case for the business. While their dividend payout ratio of their cash flows has increased over this time, as LTC has kept their dividends per share flat and their cash flows per share have decreased, it does look like the business has supported their dividends in all 5 of these years. Keep in mind that the company is using more leverage than we'd ideally be looking for here. That's something you'd want to be mindful of here as well. Either way, this is a snapshot of their last 5 years of performance, and it's not a guarantee for the future, but it does look like LTC has had a sustainable dividend in the last 5 years. As promised, everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze LTC properties, which takes us on to using a discounted cash flow model to come to an estimate of their intrinsic fair value. A discounted cash flow model is based off the predictability of a business's free cash flows. LTC has had a low degree of business predictability in its past. That potentially impacts our analysis here. A discounted cash flow model is just like any other model in any other discipline. Its outputs will be sensitive to its inputs. We're starting with an average of LTC's free cash flows over their last 5 years to give us a more normalized perspective of their ability to produce free cash flows. Then we're using historical growth assumptions to project these into the future. It's up to you to do your own homework to determine whether or not these historical growth assumptions will be accurate and applicable. If we assume the business grows their average free cash flows at just 0.5% annually for the next 10 years, then that these free cash flows decline at 2% annually for the 10 years out after that, adding in their tangible book value, which gives us an estimate of their tangible net worth. If we were seeking a 15% rate of return, which is the rate of return Warren Buffett is looking for in addition to his margin of safety requirements, then it looks like at today's valuations of LTC that a potential fair value for the business is just under $38 per share. That's several dollars above the business's current stock price. There are some key factors to be mindful of here. As mentioned, the business has had low predictability in its past. That can impact the assumptions we're using here. LTC's 6.7% dividend yield would be included in this 15% rate of return, so their stock price would not be appreciating by this full 15%, as we would not be doubly counting their dividends. Then please be mindful that this analysis is not financial advice. It's not a buy or sell recommendation of any security. Before considering any potential investment decision, please consult with your financial advisor. Now it's time for a final rating of LTC. In analyzing LTC Properties, stock ticker LTC, we learned that the business earns above average returns on equity, slightly over 12%. While the company has slightly grown their revenues, their cash from operations are down in the last 5 years. They've just very marginally diluted their existing shareholders, meaning their cash flows are down on a per share basis. The business looks to be using more leverage than their cash from operations are able to support. If concerned, you can dig into that. Their average and their current cash from operations to their enterprise value were split on either side of this 5% risk premium. Their average was coming in right at that risk premium, and their cash from operations was just below it, even though both of those were above the yield of the 10-year treasury. LTC, while their cash flows have decreased in the past 5 years, have kept their dividend payouts the same and have supported their dividends with their cash flows in all 5 years, even as that dividend payout ratio has increased. When we performed a discounted cash flow analysis of LTC, if you've done the work and you believe those historical growth assumptions, then at today's valuations, if you were seeking a 15% rate of return, it looks like a potential fair intrinsic value for LTC is just below $38 per share. There were the key aspects we touched on to be aware of here as well. It's worth reiterating that this is not financial advice, but that fair value seems to be several dollars above their current stock price. With all of the factors of our analysis in mind, it looks like LTC could be a strong candidate for further research. If you're interested in the business, I'd encourage you to dig in and learn more. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment down below what business you want me to take a look at next time. Thanks for learning about LTC Properties with me, and have a great day.